Hello and welcome to Nirma Bang, ladies and gentlemen. I'm Hiral Radia. We have with us Ramesh Kalyan Raman, Executive Director at Kalyan Jewellers, joining in. Welcome to the show, Ramesh, and as always, a pleasure to speak to you and get insights from you. Ramesh, my first question coming to you is in terms of the quarterly numbers. Have they met your internal expectations, taking into consideration that there was a third wave that we've already looked at? There has been some bit of an impact as well. So, how would you actually describe the quarter?
Yeah, so Q3 was excellent because there was a good revenue growth, high momentum, footfalls were high. There has been a gross margin increase. If you look at quarter on quarter, and it has been there for the past 2 quarters now, the margins are growing and the momentum is still continuing. But in Jan, we have seen some store closures, especially during weekends. Approximately 20% of the stores were closed during weekends in Jan in this quarter. And on an average, if you look at 90% of the stores were open in Jan. But the momentum still continues. But yes, we see some wedding and wedding related revenue being pushed to late March or into the next quarter. But overall, the conditions are really positive.
Right. And overall, if you go to see in terms of overall impact as well, which is the area in terms of geography which has seen the maximum impact?
So in Jan, the store closures were majorly in the metros like Bombay, Delhi, and in Bangalore, in South, Tamil Nadu, also a few markets. But now, last week, they have been lifted in the metros. Now, slowly, South has started announcing lockdowns during weekends. So it is like shifting from South and outside South.
Correct. And if you have to compare the impact of Omicron versus the kind of impact the first two waves had, how would you compare that?
So now, as we all believe that like things are getting normal, people know to live the new normal. Store closures are very less when compared to before. Before it was like a store closure continuously, but now it is on and off, and people also know to survive when the store is open. People have understood how to do functions with a limited number of audience. So things are a bit more matured enough now than before is what we feel at the stores.
Okay. And between international and domestic business, how are you seeing the difference in terms of, customer sentiment, in terms of the footfall, in terms of the buying power?
So Middle East, the post-lockdown or the post-COVID impact or the comeback has been slower in Middle East than in India, because Middle East is dependent on the travel between India and Middle East, the tourists coming into that place, etc. But now, if you see Q3, we had a very good revenue growth in Middle East because tourists are back, the connectivity is back again, so the momentum is high. So now Middle East, I think, is going to be good because of the market conditions there. It is a bit more vibrant than before.
Right. And overall, if you see in terms of expansion as well, do you think, it's better to stay put with the number of stores that we have and not really look at major expansion right now? Or do you think this is the time to still look at expansion and entry into, newer towns and cities and regions?
If we look at the revenue, the momentum, the gain in market share, it is the right time to gain market share because the shift from unorganized to organized is very high. And we see good revenue growth across the quarters for the past 2-3 quarters now. So our expansion has been on track. We had planned to open 21 new showrooms this year, out of which 15 we already opened. 5 of them was in Q3. So we will stick on to the expansion plan because we really believe that this is the right time to capture market share.
Right. And so what's going to be the expansion strategy for the rest of the year?
So we have plans to open the rest of the 6 showrooms in Q4. Of course, the Omicron or the COVID impact, we'll have to minutely look in so that then the expansion does not hamper. But otherwise, our expansion should be on track. We want to expand in the range of 10 to 15% every year.
Okay. And overall, Ramesh, especially from the budget perspective as well, what are the benefits that we see? Because one, there has been a cut in terms of custom duty on diamonds. Secondly, anything in terms of gold, etc., where you see that the industry will benefit?
Budget overall, it has been positive. It is on the right track. More investments in infrastructure that will surely create more vibrancy in the economy. Coming specifically to our industry, there has been a duty reduction for import of polished diamonds, which really has no impact on our business directly. But otherwise, overall, we believe that it's a positive budget and it's on the right direction.
Right. So any reason why polished diamond custom duty cut does not have a major impact? Is it because we don't use any of it? I mean, how does that functionality work?
So the diamond vendors, which usually Indian jewelers usually have relationships with, they import rough diamonds and they polish and cut in India, and we procure from them. So that is why it does not have a direct impact, because this duty reduction is for import of polished and finished diamonds.
Okay. And overall, in terms of where gold is concerned, do you think there's a possibility that gold rates could get cheaper?
So gold price fluctuation is on international markets, no? So it varies from time to time according to the economic conditions worldwide. And people are aware of the fluctuation of gold price, and they see as a long-term investment where gold has been behaving very positive for the past many years now. So it is a investment as well as a commodity which they can use. So that is how people, especially Indians, look this commodity.
Right. And overall, in terms of business as well, how well prepared are we in terms of Q4 as well? How is the quarter started on?
So the momentum at the store, when the store is open, is very high. Okay, the footfalls are there and it is comparable with the previous year. And we come from a very high base, of course, because last Q4, we had more than 60% revenue growth. So the base is very high, and January also the base is very high, but the momentum is still continuing. But we have had some store closures, and we also see some demand getting pushed to late March or the next financial year, because wedding and wedding related demand depends on the wedding, right? So when the wedding gets pushed, then this demand also gets surely pushed. But the industry is very resilient, so we have seen that before. So the demand quickly comes back when the wedding and other celebrations start happening.
Right. And overall, in terms of online e-commerce business, how are you seeing the traction there? Because usually when it's jewelry and real jewelry, people really prefer going to stores, right? But there is that trend where something which is a little less expensive, smaller things, people are looking to buy online. So from your experience so far on the e-commerce front as well, what's the kind of traction you're seeing?
So e-commerce business is growing in good double digits for the past many quarters now, past many years now. So even if you look at Q3, we have grown by around 40% in e-commerce.
Correct.
So that vertical is growing, and it has created a new segment by itself, gifting, because jewelry usually does not fit into gifting. I'm talking about 5-6 years before, but now it is a new segment, and it is not connected with the retail space. Okay, retail revenue is different, and that creates a new segment. But a lot of research happens online, and it ends up at a retail store. So online, of course, is helping our offline also, and online itself is growing at a very good pace.
Right. So basically, it acts. I mean, it's growing at a good pace, but simultaneously, it acts like a marketing campaign as well for offline sales.
Exactly. A lot of research happens there.
Right. And currently that we spoke about marketing, what's the overall spends looking like as a percentage of revenues? Have we reduced it due to the pandemic, or does it remain the same, and any plans to expand on that front?
So if you look at quarter to quarter, meaning Q3 versus last year versus this year, last Q3 is not comparable because the spends were very minimal, because it was just recovering from post-COVID. But otherwise, approximately 1.8 to 2% of the revenue is what we spend on marketing, but it depends upon quarter to quarter. In wedding seasons, we spend a bit more percentage, but generally it is like higher on what you call Q3 and Q1 and lesser on Q2 and Q4, but overall it becomes in a range of 1.8 to 2%.
Right. All right, Ramesh.
Yeah.
Thank you so much for joining us on the show.
Thank you,
and
thank you,
giving us
thank you,
these
thank
insights.
you.
Good luck.
Thank
Take
you.
care and speak to you soon again.
Sure. Thank you.
Thank you.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.